Now let's have a look at the tax jurisdiction when it comes to companies. And this is really interesting now because companies have a choice to have a foreign branch or a foreign subsidiary. Do you know what the difference is? Okay, both can be companies, right? But it could be, one could be deemed a branch and one could be deemed a subsidiary. Okay, so a foreign branch, it's a company registered as a branch. So immediately, every dollar it earns becomes income of the US parent. But with a subsidiary, every dollar it earns stays within the entity. And it does not become income of the parent until a dividend is paid. So therefore, with a subsidiary, you have more power, right? You have more power to work out the timing of when you move money home. Okay, maybe you don't move money home when the parent has earned a lot of money, right? You wait for the parent to have a loss year, then you send a dividend home. You with me here? All right, so you balance out. Okay, but with a foreign subsidiary, when you send money home, then the dividend paid is taxed. Okay, of course there are tax credits that you can get. All right, it's not like you get double taxation. There's a lot of double taxation ways out of double taxation here. But just know the difference between a foreign branch and a subsidiary. But economically, think about it. What happens is when you expand in different countries, this is global multinational operations, do you start as a subsidiary or a branch? More likely as a branch. Maybe it's a sales representative office. For example, I went to Freeman Manufacturing and made the Hoverboard. You know the Hoverboards? All right. And they said, oh, we have a branch in the USA. Oh, really? What's the branch for? After sales service. It's not that they make the product. So often branches are set up for after sales service. Often they're set up as a representative office or a distribution office. So it's branches are always associated with sales. You with me? Whereas a subsidiary might be associated with sourcing or manufacturing, and you know you're actually creating value. You with me here? Okay, all right. So a lot of US companies may set up a Hong Kong subsidiary as a go-between from goods from China to Hong Kong, then they're sent to the USA. Why? Because you send the good from China at $10 per unit, and then you send the goods to USA at $20 per unit, and then you sell it for $22 per unit. So instead of sending $12 profit to the USA subsidiary, you're keeping 10 of those $12 in Hong Kong. $10 at 17%, 0.5% versus $12 at 35%. Big difference, right? Okay, so that's why Hong Kong is a very popular destination for multinational companies. Okay, even though Hong Kong doesn't make very much. It's sort of like a transshipment point. Okay, all right. So many of you know that, but I just understand the tax planning strategy behind that. Okay, so foreign branch and subsidiary. Notice there's a big difference between the two. Subsidiary is really like it's an independent entity. It's independent. It's got its own profit and loss and income statement, balance sheet. So here's an example of a Hong Kong company, sources products, services from China as an example. And the key point, no profits taxes are applied in Hong Kong for shipments that go through Hong Kong. So the goods go into Hong Kong, then the goods go out. And like I said, there's a 10% that you, that $10 of that $12 profit that you're taking out in Hong Kong, that stays here. Of course, then you can use that for further investment into China, or ultimately if you send it as a dividend to the USA, then you end up going to have to pay tax on it. Okay, so just note that your company, however, in Hong Kong, you have to specifically designate it as a particular transshipment type company. Okay, and so it has to be registered like that company in order to have this status. of not have to pay any tax of goods coming in, goods coming out. Okay, so a lot of companies in Hong Kong are for that purpose. That's called offshore income. It's not taxed in Hong Kong. It's one of the many policies that make Hong Kong very business friendly. Remember, then the money's in Hong Kong. How do you get it out back to the parent? You've got to pay a dividend. But ultimately, you may use that money for further recapitalisation of your China operations.